what is going on, I want to show you guys a quick trade that I took. Made about a couple of dollars on a very small account, just looking at liquidity. Okay, the liquidity. So today we'll be looking at liquidity, and let's get to it. Now this is GBP USD, the 4-hour time frame. So what I was seeing on this trade was this beautiful push to this area right here. So what you want to see is these nice beautiful candles over here. You want to see those high, right? That is liquidity right there. Then you want to see that right there as well, just like this, right? The girl just woke up, so like I just wake up now, so I am a bit, but let's go. So this is what you want to see. You want to see those obvious spikes, or I could say obvious forks in the market, and that is where those nice orders are. So I was just expecting for price to push to that area, come here to my nice 3 candles, and take liquidity here, grab this liquidity here, right? So let's look into it like this. So I'm looking for price to come to this area, take out liquidity, and then come to this and come here, and then I enter right there, right? That was the trade that I took. So I was just looking at that liquidity and the liquidity on this candle. So I remember saying in the channel that every single candle is actually a liquidity, because the reason we have this candle, we had a nice order that was filled by that candle, right? We had sellers, early sellers in there, so therefore they will come back there to take up those stop losses and come back to the downside. And then we can simplify it by saying, if we're seeing something like this, spike 1, spike 2, this is spike 3. So we want to see that level being taken out like that, right? So the arm that took out the new high, right? This high right here is the arm that we're going to use to enter. So that was our liquidity right here. So let me type. So it's LQD, lovely times. So LQD is taken out. So the same arm that pushed us out of that liquidity, we'll use that for entry. So entry there, then again, this is liquidity again. So we're wanting price to do something like that. So basically a new high that take out this level, that is our liquidity. So we're always looking for just those old highs. So this was my old high, right? So price came here, pushed all the way down. So my high, my thought was, if they can come and take out this high or this one, therefore liquidity has been grabbed, and then we can push to the downside. Someone was saying, okay, what about these candles right here? Oh my god, there's an imbalance, or is this and that? Okay, no, we're not talking about imbalance now. We are talking about liquidity. So I'm just waiting for price to come and take out orders of that area. If they don't come there, I know they will use this area or that area, and that is what I use. That is why sometimes my chart can be this clean and I'm just using one tool. I can be just moving this thing around. So now that was my liquidity. That liquidity was not grabbed, unfortunately. Let me show you something now. Right, see how my chart is nice and clean. So I'm saying now that I was waiting for price to come, take out that liquidity, but it did not take this one that I was planning to really sell very high here. So it didn't come and take that liquidity, but it decided to take this liquidity on this candle. Fine, as long as I know that the candle closed and the candle already have been used. So they used that candle already. They came here, they dropped. So my next, let's go now to, yeah, let's go to this area. So in simple term, liquidity is areas where there is order. So liquidity is just orders, okay? Loads of orders, that means that's more liquidity there. If you're seeing something like this in price, just prepare yourself for market to get there, grab that thing out and push to the upside, okay? Because what they want to do is to come distract these people that are still waiting here. Let me say swing traders, maybe they still think price will still push all the way, but now price is pushing its way up to come and take that level. So what we're expecting to see is something like this. So what I use is, if I'm seeing that push that took out that high, I do not enter high. I wait for the market to come back here. So the same arm that took out liquidity is the same arm you would use for entry, right on that middle area right there. And then you push up with the market. You go up with the market like that. It's that simple. There's not much into it. So liquidity is orders, areas where people have placed their stop loss. That is where people might have put their stop loss over there. Area here, people have put liquidity over there as well. So we look into let me see something. If we look into okay. So this area, this is now a very old high. This high was from the 13th of July. So that means that if we come here, I am expecting something like that. Price come to liquidity, push down, push up, because they're not just going to get there and push all the way down. They will come there and create like a Judas string and then come back down. But first they will take it out. Where they came and take it out, just prepare for them to push up a little bit before they come back down. And that is liquidity there. This area right here, you guys, is liquidity right here. As I said before, there was this area, which the one I've entered in, that area there was liquidity as well. So it could have entered right there as well. So, and then you push all the way down. And then every time the market creates like a new high, a new low, that is liquidity again, because you know who you are, you'll be selling there, you'll be putting your stop loss there. That means that you should try again to enter for a buys there again, because they will grab something there and push back to the upside. So where you have bought, the market will sell again. Where you have sold, the market will buy again. Like, it's just like, I don't know, it is the same thing, we're just saying it in different ways. But liquidity there, liquidity here, right? For instance, those easy lows, obvious lows, liquidity there. That was an order. Yes, a hedge fund or a big bank decided to buy this area here. So there is an order that they still need to come and take out there and fill in right here. So that is another area of LQD. So when we come here, someday, don't know when, if we can do something like this, we'll take that out, we'll push up. That's why the market push up, it breaks, they have to react, then push back down again. So those who are most of the time trading support and resistance, thinking that the market will get there and then push all the way up, and then it pushed back down because it had to grab the order, breathe, and then come back down. And that is liquidity. Right, so there will be part 2. Just look out for part 2. Do look out for my Forex Funds challenge as well. I think the 5,000 challenge as well is coming to the channel. Hope to see you again on the channel. Please like, do subscribe, and cheers.